This is a Momentum Media production.
Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Hello everyone, welcome back to another episode of Property Showcase. My name is Emma Musgrave, I'll be hosting today's episode, and today we are joined by Tran, who is a buyer's agent at InvestorKit. Kev, welcome back to the show. How are you doing today?
Yeah, really well, thank you. Thanks for having me back.
No, thanks for being here with us today. Obviously, there's a lot for us to cover off, but what I really want to get down to in terms of this episode is providing, I guess, a bit of an overview about due diligence at the moment, and more specifically, how to nail property investing due diligence. But first, before we get into that, Kev, why don't you give our listeners just a bit of an overview of some of the key themes that we'll be touching on today, and also in terms of what you're seeing in the market that really lends itself to this particular topic that we'll be going through.
Yeah, of course. Thanks, Emma. So I think when it comes to due diligence, a lot of people and clients that we speak to initially, they think about the property itself, which is really important and a key factor in the process. But for us, it's even before that. So it's understanding the market that you're going to be purchasing in. And then before that, it's understanding the strategy that you're going to implement for your overall portfolio. So portfolio strategy, number one. Number two is the market research. And then number three is the actual property.
Yeah. Absolutely. And this sort of thing is, not just relevant for new investors or those new to the market, right? It really affects everyone because, as we know, these things change throughout market cycles and upturns, downturns, that sort of thing. Would that be fair to say? Yeah,
absolutely. And especially when, the market's not as heated as it was in the last couple of years, you have to be really strategic now with what you do. You can't just have a blanket approach that may have worked a couple of years ago. You want to be really clear on your strategy and then where you're going to buy, and then, of course, what property you buy as well.
Yeah, absolutely. All right, Kev, let's get into it. So we want to break this down into three parts today. So the first one, when it comes to portfolio planning, so obviously there's key things that we need to consider when it comes to mapping this out. Let's talk about finance in particular. How can investors first go about making sure they've got their due diligence in order when it comes to the financial aspect?
Yeah, so with finance, we find that it's really easy to make mistakes on both sides. And what we mean by that is a lot of the time, buyers may overestimate or overextend themselves on properties, which becomes an issue later when interest rates rises and stuff like that. But on the other side of things, we also find that some buyers believe that they haven't got enough borrowing capacity sometimes. So some clients come to us and they say, hey, I was speaking with my broker, so clients may be based in Sydney or Melbourne, their broker may be based there as well. And the prices there for houses start at 1 mil plus. So it's quite easy to then go, well, actually, we can't afford a house here. Maybe we can afford an apartment. And that's like from 600 as well. So a lot of clients we speak to, we unpack that, you can be pre-approved for 500K, which opens up a lot of opportunities nationwide. And, for us, we buy for a lot of clients between 375 to 450K. And, like a 450K purchase could be in the next growth region. As we've discovered in the last few years, a lot of these regions have grown significantly at that price point.
Yeah, sure. That makes sense. And are you expecting a similar sort of trajectory as we move along? And to say, I don't like to put a specific time frame on things, but if you had to say the next 6 to 12 months, even beyond that, is that a sort of similar, theme that you think that will be playing out or continuing to play out?
Yeah, I think so, because affordability is one aspect that we look at. It's not the overarching, there's no one key indicator, but that's one thing that we assess as well in a lot of these areas. Even with interest rate rises, it's not affecting people as much. People in the area, their household incomes can easily afford these rises. So this entry point, it makes it really attractive for investors as well.
Yeah, absolutely. And what are you experiencing when it comes to the end goal of these clients, particularly at the moment that you're dealing with?
Yeah, so a lot of clients come on to us and they want to talk about the next purchase, the one that, which makes sense. You want to make sure you're buying the best purchase for right now, but they're not looking at the overall picture. So for us to take a step back with overall strategy is understanding what is the overall goal or the end goal that you want to get to, whether that's a passive income target or your portfolio value, what sort of equity you're looking at, and then what sort of age. How long do we have to build out this portfolio? Because all of these will impact on how you purchase and when. So for us, understanding those goals, then reverse engineering to work out the strategy.
Yeah, reverse engineering is a big one and a good approach, I think, as well when it comes to this sort of stuff. Yeah. Speaking about the level of aggression that's in the market at the moment, I mean, we cover this quite a lot, especially across smart property investment. What's your take on this specifically? Are we seeing this kind of activity in the market? Are certain demographics more aggressive than others at the moment?
Yeah, so when we discuss with our clients in terms of a strategy, we factor in how markets are performing in the short term, because that's what's going to be, and we'll touch on this a bit more in terms of pressure. We need to assess what sort of pressures in the environment that's going to cause that growth. But when we're talking about the strategy with a lot of our clients, we want to understand, okay, cool, we know the end goal, we know how long we have to achieve it. Now we need to talk about an acquisition window. So we've been quite strong advocates for having a shorter buying window as possible. So if you can purchase, let's say, for example, our goal is to purchase 4 properties. And if we're capable of doing that within 5 years, we should do that in 5 years as opposed to doing it in 10 years. Because for that last purchase, if you do it, let's say you've got a 20-year buying window or goal, and then you're buying over 5 years, that last property has 15 years for compounding growth.
Sure.
But if you stretch it out over 10 years, you've only got 10 years, So it's really important, if you can, to buy early and then let compounding do its thing.
Yep, excellent. That's fantastic. And just in a similar sort of vein, when we talk about, I guess, aggressiveness, when it comes to risk management and the conversations that you're having with clients in this respect, what are sort of the main considerations that you need to make sure that you guys at InvestorKit are really considering when it comes to risks and matching that up appropriately with what the client is after at the end of the day? Exactly.
So the first thing for risk management would be understanding minimum rental yield. So speaking with your broker and understanding what do you need to achieve as a minimum. For us, where we're looking at anything minimum 4% yield, which is kind of goes back to that first point about borrowing capacity. We find that if you're working with a broker that understands investing and structuring loans, then they'll know that there are many markets within the country with high yields. But if you're speaking with a broker who predominantly does Sydney or Melbourne, they may be using a default yield of say 2 or 3%. So it's important to get that right advice. And then the second thing under risk management would be your tolerance to certain cash flow levels. So what sort of buffer will you have for each property? Is it 3 months, 6, 9 or 12 months? Knowing all of this will determine, when you can purchase again and what you're comfortable with, because there's no point being really aggressive if you're going to be freaked out the whole time,
Yeah, of course. Yeah, and I'm sure that, you've been hearing a lot on the ground about, the RBA rises and subsequently the banks raising rates and all that sort of thing. So lots to consider going forward, I suppose.
Absolutely.
Moving on to our next point, Kev. So we want to talk about 2 different types of, due diligence. So the first one being market due diligence and then also property due diligence as well. So if we look at market due diligence specifically, I know that you guys, obviously have put together a lot of resources and a lot of white papers on this very subject. Take us through, what do people not know about market due diligence? What's some of the hidden, the tips and tricks that you have for property investors in this regard?
Yeah, of course, we'll share a few things here, but the overarching message that we want to remind people is it's something that many people don't recognize in how simple it is. It's that property growth, it exists in areas with pressure.
Yep.
And just to highlight what pressure looks like, I want to show you what pressure doesn't look like. So what I'll do, I'll share a few trends with you. We'll take it step by step and you tell me if you feel like capital growth will exist in this location. Mm-hmm. So unemployment is rising. You've got low levels of infrastructure. The listings for sale are increasing. We've got sales volume, so the number of sales occurring are falling. The days on market, so the time it takes for a property to sell, is increasing. You've got vendor discounting, so the discounts given on listed prices is also increasing.
Yep.
Vacancy rates are very high. And lastly, there's a lot of building approvals in the pipeline. So what do you think will happen here, Emma, based on sales pressure and rental pressure, just off some of the data points that, just the tip of the iceberg here?
Yeah, for sure. Well, look, I think that it would mean that it's probably not the right area to invest in. to cut it short, you've got to look at these sorts of stats, especially I think time on market is a really good indication of that one in particular. Why aren't people buying there? And then it kind of fountains out and you can explore things like unemployment levels and so on and so forth. So that would be my hunch, Kev, that it's not a good area to invest in at the moment.
Yeah, exactly. It's like when you point it out with all these different points, it kind of makes it really simple to be like, well, of course it's not going to, be a good area to invest in. But unfortunately, a lot of investors don't go through a process to assess areas and find the pros and cons. So that's just an example of some of the things we look at.
Yep.
But it is a balance to find these areas where there is competition, because that's where the growth happens. So if you flip those trends over, it becomes quite apparent that this is where positive price pressure looks like.
Yep.
Now, in terms of market due diligence, it's all about those points that we just mentioned coming together.
Mm-hmm.
Some other key areas that we consider would be like a diverse economy.
Mm-hmm.
You want to make sure that there are lots of different industries and not heavily reliant on mining, for example.
Sure, yep.
We look at areas with enough statistical reliability so that the data there is actually something that we can assess. So typically, we're kind of looking at any area with at least 20,000 in population, all the way up to capital cities with millions, of course.
Sure.
And I guess the main thing that when you're looking at all these data points is understanding that we're looking for pressure and diversity as well.
Yep. I think that's a really good point to make, is about that diversity, and particularly when it comes to those sectors, as you mentioned, you want to make sure that there's enough employment opportunities there that aren't just solely focused in one sort of sector, I guess.
Exactly.
Yeah. Cool. That's great, Kev. And then I guess if we take a deeper sort of look into assessing regions, you guys, I know, you have a lot of insight in particular markets across various parts of Australia. So what is some of the stats that are coming out of the particular areas that you're seeing as pretty attractive or a good investment opportunity at the moment?
Yeah, so it's always important to remember, even when you're assessing a region, there's going to be markets within markets. So if you're looking a bit deeper into these areas as well, you'll be able to find, some obviously suburbs that are more superior than others and certain sub-markets that will be even better. So something that's really interesting that we recently made a discovery on when we look at all SA3 areas within the country, and it's contrary to what the mainstream media has been discussing, and it's actually 1/3 of these areas have actually seen price increases over the last quarter.
Right.
Yeah. We're assessing all statistical area 3 regions with just houses, so not apartments.
Yep.
And with statistical reliability, so anything over 20,000 population. When you add in units, when you add in all locations, that number drops. But I think it's a very important factor that there are regions increasing right now, even with rate rises. So just a few examples of these locations. We've got a few in regional Queensland, like Toowoomba, Bundaberg, Rockhampton and Townsville, just some areas that we've seen some growth. And like Toowoomba is an area that I mentioned previously I've purchased personally, and earlier this year, so not last year or during COVID, just a few months ago, our founder Arjun bought in Townsville as well for 412. So these opportunities still exist right now.
Yeah, I actually used to live in Townsville, and even back then noticed the potential there. So it's interesting to see that develop. And I suppose, if we're doing a bit of crystal ball gazing, it'll be those areas in particular that will be particularly attractive, even as we go through, as you mentioned, rate rises and that sort of thing. People generally like to invest in those sorts of areas where there's a lot of opportunity, right?
Yeah, great for investors, but also for us, one thing we look at is the owner-occupied demand. So there's a large population of family buyers and typically when things are heated as well, they're the ones that may pay emotionally. So we need to make sure there's a good mix of both investor and owner occupied activity.
Yeah, okay, excellent. That's great. And then what about, when we talk about understanding key differences between states when negotiating? So we've mentioned, Queensland. How does it differ from other parts of the country when it comes to, identifying what differences are and what you need to know when you're an investor?
Yeah, so this is more like a side note when it comes to that market research. And if you're an investor who's, especially right now, you want to make sure that you're picking the best location within the country, it's really important to understand the differences when it comes to legislation so that when you negotiate or the process of engaging a building and pest inspector or solicitor, you know what sort of differences to look out for. So if we're just talking about building and pest clauses, for example, Queensland would probably be the best in the country. The standard contract there has a building and pest and finance clause that's very attractive to the buyer. And personally and professionally, I found that vendors and agents are quite reasonable to come to the table after the report. Victoria, I'd say, is probably the next step down in that the contract covers major defects only. So anything minor, you're not able to kind of renegotiate. And then with WA, I'd say this is the market where you need to watch out the most if you're a buyer, because the standard contract, the building and pest clause doesn't protect you for much at all. So it only covers you for major structural defects. And even then what constitutes as a major structural defect is quite limited. And if the report finds that, you can't terminate the contract. You have to kind of let the vendor come up with a solution. So if you're going to buy in WA, I'd suggest putting through like a due diligence clause or something else. But yeah, just to give you a bit of an understanding on some key differences in areas where there could be some good opportunities, but you need to be really careful.
For sure. And just again, as a bit of a side note to that, I'm curious as to when you're having these conversations with clients, with investors, are they acutely aware of the differences when it comes to this? Or is this where the education piece has to come in from InvestorKit to really, let them know that there might be differences that they might not be used to if I'm, say, a New South Wales resident and I'm buying in New South Wales and then I choose to invest interstate? Is there much? Because I suppose from my perspective, if I'm an investor, I'm reading a certain amount of news, I have that kind of the bare bones of the knowledge. But what you're talking about is that step further, I suppose, in really identifying what might be, a potential, don't want to say risk, but a potential thing that you'll have to consider if you're buying in an area that you're not completely familiar with.
Yeah, no, I think you're right. It is an absolute risk. Like if you kind of enter through and with a contract, you make a mistake with what's, like in terms of not having good clauses or conditions that protect you, then yeah, it absolutely can be something to watch out for. So a lot of the clients that come through to us, some don't know the differences. They know that every state's going to have different legislation. But what I just talked about with WA, for example, it shocks a lot of people.
Yeah, for sure.
So, it comes down to the education, like you said, but also the trust that we know what we're doing. So it gives them the peace of mind,
Yeah, absolutely. No, that makes perfect sense. All right, Kev, now let's touch on property due diligence. So I understand that you've got some resources that you'd be keen to give away to our listeners. Do you want to walk us through what's on offer there?
Yeah, so we're thinking that it's going to be really helpful that we actually want to prepare a bit of a resource for our listeners when it comes to actually assessing particular properties. Hopefully it'll give some clarity to what to look out for and also dispel some myths on what actually affects sales prices. Okay, excellent. And what's the sort of best way that we can access that? Yeah, so if you just shoot me through an email with the subject line due diligence, my email is kevin@investorkit.com.au. Give me a couple of days just to go through all the inquiries, but I'll come back to you and personally send a resource which will list out all the data points that we look at, all the criteria, and I might put through like a small video as well just to explain how to go through it. But it's what we use professionally to assess properties and shortlist them and so forth. Yeah. So, Kev, what are the main sort of considerations or factors that you guys take into account at InvestorKit, or what can the viewers or those that take up these sorts of resources that you are providing get out of it? What does it take into consideration? Yeah. So what this will do for a lot of investors is, of course, give some clarity on what to look out for when they're assessing particular properties. It'll also dispel some myths based on what will actually affect a property when they go to resell it. We've collected a lot of the data based on a lot of purchases that we've done. And some of the things that we look out for would be bushfire and flood zones, which I think a lot of investors would be privy to. Yeah, we also, especially the floods, I'd say as well. Of course, what we're seeing at the moment, aren't we? Yeah. We look at proximity to a cemetery, industrial precincts, making sure that properties aren't on main roads or busy roads, away from highways, that they're not in front of a bus stop, or like right in front of a busy roundabout or intersection. We also don't want properties that are directly facing a school or one that's impacted by cars coming in and out every day. And this is an interesting one. Sometimes directly facing a park or backing onto a park can be a bit of a deterrent. We want to make sure there's no major power lines or substations nearby, so we're not talking street lines, or a property that's like too close to a train station or train tracks. Yeah. So these are just some of the things that we look for. And with the resources, I'll have a complete list for things, and it's exactly what we use to make sure that we're selecting the right property for our clients. But yeah, Emma, as you can see, this is why many clients engage myself to work with them. If anyone's considering getting in touch, they can get in touch with me on kevtran.com.au. That's KEVTRAN.com.au and request a consultation. But this is the care that should go on a journey when it comes to buying property, starting with the due diligence of property portfolio planning, keeping it realistic, understanding what you can do and what you can't, then going to the actual markets and using industry-leading research, and then lastly, making sure that we're not using a gut feel around whether or not to go ahead with a property and using a very clear list that we know is what to avoid. So, yeah.
That's great, Kevin. I think, for someone like me that's an investor that likes to have a checklist, then this sort of stuff is perfect. I think sometimes investors do unfortunately get into the trap of going with their gut, but having a really concrete, what to look out for is really helpful. So thank you for providing that. Kev, anything else before I let you go? You've been so generous with your time and also with your resources that you're sharing to listeners, but is there anything else that you think is worthy touching on or trends to look out for going forward?
No, I think that we've covered a good amount. So, yeah, just if you're interested, shoot me through that email to kevin@investorkit.com.au and I'll make sure to come back to you with that resource. And again, if you're considering to work with myself, you can reach me on kevtran.com.au, request a consultation, and you'll work directly with me with the research backed by InvestorKit.
Kev, thank you so much again for joining us on the show. And yeah, likewise, if you want to get in touch with InvestorKit or you want to follow what's going on in the news when it comes to InvestorKit, check out smartpropertyinvestment.com.au. Plenty of trends happening and lots to look out for. Kev, thanks again.
Awesome. Thanks, Emma.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.